Okay. I'm Kobus Cronje. I'm the managing director of JTC in Guernsey. I'm also chair of our global funds business. Um,
Hi, I'm Jack Paris. I'm the CEO of Infrared Capital. We're an infrastructure asset manager focused on the middle market. And we have a variety of different strategies, everything from core to value add. In terms of investment sectors that we typically focus on, sectors that most people I think would be familiar with: transportation and logistics, the energy transition, and digital infrastructure.
so, Jack, we just came off the inaugural European Private Capital Summits panel discussion around infrastructure and renewable energy. Any key takeaways for you from the discussion?
Well, I think some of the topics that came up, I think, are topics that we frequently hear from our investors, um, certainly in the current environment. It's what impact does the rising rate environment, inflation, and higher cost have on your returns and our businesses overall? And I would say, in general, one of the reasons I think investors are very much focused on infrastructure, and one of the principal reasons they like it, is because they view it as a defensive space. In an inflationary environment, there's an ability to pass on or pass through costs as they're rising and protect the underlying investment. Another theme that I think has been coming up is with some of the political changes that have taken afoot, certainly in North America and in the US, an election coming up in Canada, and there's been a number of elections in Western Europe. How's that going to potentially impact the investment space? And for certain, there will be changes in terms of where opportunities will be across these different geographies. But I think we take solace in the fact that the overall addressable market for infrastructure in areas like digital and the energy transition are absolutely massive. So, the energy transition space, or the energy space, is a $4.5 trillion investment opportunity annually. The digital space is smaller than that, but also is massive at roughly 3.4 trillion. So I think to some extent, we need to sharpen our perspectives on geographies in which particular markets, but undeniably, the need for infrastructure and digital infrastructure is growing, and that's not that this is a secular trend that I don't think is going away. What I think we might quibble over is what the steepness of the growth trajectory might be, but it's undeniably, I think, moving upward, and I think we're going to be very well positioned for that.
It's great, Jack. And I think just to add to that, one of the things that we're seeing is that the demand for energy is going to continue to grow. And you referenced the digitization and the demand for data centers and the AI revolution. As is just what all of that is going to drive further demand for energy. So it's almost as if the infrastructure sub asset classes are supporting each other in terms of growth and future opportunity. So, Jack, just maybe looking at a little bit more from a personal perspective, you were the head of infrared in the US, moved to the UK a couple of years ago. How have you found that transition? And was it two very similar markets or very different? You want to tell us a little bit about that journey?
Sure, happy to. So you're exactly right. I've been here now approaching 2 years in London, and I think I'd characterize it this way. I think the sophistication of the markets and the investor is very high, actually, in Europe and in London. This is really, I think, in many respects, where infrastructure really was created as an investment class. So, and I think it's been further along the curve in some of the areas like renewables for certain. So there's been a lot more development, a lot more investment opportunity here. So there is definitely a base and a level of sophistication that I think is best in class. I would say though that what's interesting, and this again, this is changing a little bit, but if you look at the addressable market opportunity, North America is a growing market, and the growth rate of that particular market relative to Western Europe is steeper. So we're seeing a lot more development opportunities for sure in North America. And I'd also say that I think this was in part driven by the fact that commodity prices in North America have been lower. So if you have like $3 to $4 gas, and going back $2 gas and $1 gas an MMBTU, it does make it harder for renewables to be cost competitive. So it's taken, I think, a little bit longer, but now I think there is a much bigger opportunity for things like renewables and the energy transition in North America. And the fact that it is a common market now. There's regional power and electric markets to be certain, but it's a common language. You have, for instance, a transmission regulator that's a national regulator. So it does make things, I think, a little bit more easier from an investment perspective. So we feel pretty good about that. But at the same time, we think that the digital market, it's still very early days here in Europe as well. We think there's a long way to go on that front. And I think as even markets within markets, as countries become, I think, a little bit more protectionist, which I think is inevitable post-COVID and post some of these European conflicts, that there's going to be an opportunity to invest in critical infrastructure in nations that are looking for energy security. So I think that's also going to be a very big opportunity.
One of the things I was quite curious of and wanted to get your view is whether you think the current capital market and that's available and that are able to get access to infrastructure related investment products. Do you think there is an opening up of that market potentially in the future on the cards as well, the sort of so-called democratization of the capital? The advantages of infrastructure is the protection risk and the yield play effectively that's there, and currently it's almost exclusive to institutional investors and public sector capital. Where do you see that moving in the future, and is that something that we're going to see some development and opening up of markets?
I think the alternative asset class in general should have greater participation through the capital markets and through the wealth channel. It's a relatively small part of the market today. It's almost non-existent, and I think over time it should become a bigger part of the market. I think there's some firms that have already tried to access this and have done a reasonable job, but I think it's still very early days, and I do believe that we will see greater participation out of the capital and the wealth channels for alternatives. The one thing that I think does make whether it's infrastructure or private equity somewhat different than your traditional capital market investments is that there is some amount of duration that's required to see these investments through, whether it's a cycle or whether it's development. And there has to be a little bit more patience, I think, when you take on this type of exposure. So and related to this, I think there has to be a sort of a mechanism to deliver some amount of liquidity to those that really need it, because I think you have to have that. You can't have a product that is illiquid for 10, 15, 20 years. That's going to that's going to freeze a big part of the investable community. So I think figuring out how to access this market, but at the same time having at least some amount of liquidity that makes it, available to a broader group of investors, I think is going to be the key.
Anything?
No, thank you very much for hosting me, and look forward to speaking to you again.
Brilliant. Thanks, Jack.